All right, I guess we have to start. The music ended. The music ended. So, good morning, comment allez-vous? How are you? Boy, you look good. Hey, how about that CPI? First initial response, dollar weakness. Hey, look, everything's fixed. We're fine. Awesome. Everything is right as rain. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Hey, my name is Wayne. I'm a currency trader just like you. And over the last week, we have gone through the FOMC meeting together. Non-farm payrolls live together. We've gone through the political elections, the midterm elections in the United States of America. And now CPI. Holy smokes. So, hey, the worst is over. The best is ahead. This is going to be a great couple of trading weeks. And then we got holidays here in America. So, great. Let me know how I can help. I can do technical analysis. I can do fundamental analysis. Maybe we could talk trader psychology. But right now, I think we're just going to burn through the charts. Burn through the charts. Particularly, I believe we should look at dollar pairs. We should look at exotics. And we should look at gold, oil, and Bitcoin. What do you stink? Smell like a plan? If you look at the description below today's video, there's a link to my book. There's a link to FX Bootcamp. The video training membership, but also the live trading groups are available there. There's links to free training courses on YouTube. And there's also a link to tradersway.com. They're an ECN. They use straight-through processing. Boom, pow. You pull the trigger, they enter your trade into the interbanking system. Faster than most, at competitive rates, and they pay you swaps. Oh my God. Check them out, tradersway.com. I recommend them. They earn my loyalty and respect. So lots going on in the world today. Takes everything you got. Anyways, I think that was cheers, wasn't it? All right. So yeah, let's take a look. Okay, now, yes, the media is reporting CPI is better than expected. I already gave advice in the day trading group on how to break that down and digest the CPI to get sort of the real point of view. So I'm not ready to say it's good or bad. But what we are trying to do is not outsmart the market. We want to see how the market reacts. We trade the market. We don't try to beat the market. That's, again, a fool's errand. So right now, the response to the market is dollar weakness, yen strength. Okay? All right, fine. So let's move on with that. Okay, that gets us up to here. Okay, we're back to resistance. Be careful, son. You don't buy at resistance. So now that the news has come out, you're way too late. Be careful. Okay, here's the pattern that's going on right now. And you want to allow it to make a higher high, come down and use this area as support. You cannot, as a bull, buy at resistance. You can only buy at support. In this case, you got to allow it to make a roll reversal. So if you chase price, you're going to get crushed. That's it. Done. MoveOn.com. Okay, kitty cat flipped right around the central pivot, right into the moving averages. Okay. Okay, now what? Okay, and now we're here. So the way, if you're going to continue to be a bear on this one, is up, and you can sell here. This is a sell. Or down, up, or you can sell there. Because remember, if you're a bear, you can only sell high at resistance in a downtrend. Okay. Darko says, that is where you were telling us yesterday there would be a... oh, wait. Let's go back. You're still on Aussie, or I missed it. Let's go back to Aussie. Oh, you're saying this one. This one here, is that right, Darko? Johnny says, you really believe the weakness is going to hold? I never said that. But it fits with the seasonal model. And also, if the interpretation by the market, okay, if the interpretation of the market is that that was a good CPI, then it was a good CPI. Many years ago, I bought a book called How to Judge a Fine Cigar. You know what the answer was after you read 150 pages? If you like it, it's good. Okay? It's like very often I meet people, they're like, Wayne, you know, I like a $10 bottle of wine. It tastes good to me. I don't need a $50 or $100 bottle of wine. I like a $10 wine. It's good. I'm like, yeah, you're right. Okay? Well, Johnny says subjective, but we're subjective, I think, Johnny, would be like my opinion, your opinion, Darko's opinion. That's subjective. But when we're measuring the herd, like think of it this way, buffalo running across the plains. Every buffalo is subjectively picking their path, but collectively they're going, they're going west, south, right? Southwest. So collectively it's not subjective. You know what I mean? Oh, I mean, well, it's the same thing, right? So what I'm trying to say here is if the market believes it was good, it was good. There's no debate. I can't say, oh, the market's wrong, it's really bad. And by the way, I gave a detailed way to look at today's CPI. And I haven't even had a chance to look down at that. But I'll give you a hint. Wages and rents, right? The sticky stuff. So anyways, I think further analysis of what's been blurted out by the media is probably needed, but it doesn't matter. Once again, I'm not trying to outsmart the market. So if I was a bull on this, I would buy something like this. And yes, Darko is right. If you were in the day trading group last night, we were talking about that as being the buy zone. Okay, great. Now it's happened. So what? Okay. That's all right, Darko. You know, most of the time when I hang out with the crew and I say, hey, let's go to a fancy cigar bar and get some cocktails, very often it's people's, first cigar, or they've only had a few in their entire life, and they really don't know much about cigars, which is fine. But I by the way, in those situations, I'm really honored that you would roll with me and try something quite different. Try something quite new, put yourself out there. A lot of people are nervous too. Like, I heard if you inhale, you're going to get sick. Yeah, that's right. So don't inhale. So anyways, it's quite a new experience. And so, I like to explain the process. So, a cheap cigar, a cheap premium cigar, I think takes, like a cheap one, like not the good one, not a gas station cigar, but out of a hand-rolled premium cigar. A cheap one takes 39 months to make. The cheap one, the one they kind of hurry up. So, to explain the process of why it takes 39 months, maybe, many more years. I've had cigars I have a box of cigars in my humidor that are 25 years old, never opened. So it's amazing the process that goes through it. So I like to share, and then, and all of a sudden people leave. And very often I recommend the Monte Cristo number 2. It's very light, it's very mild, but it's perfect, perfectly engineered, perfect everything. And so that's usually, If you hang with me, that's usually your first cigar. So Darko, you're probably going to go with that Monte Cristo #2. Creamy, I would describe it. Creamy. Beautiful torpedo shape. Yeah. Yeah, Matrix. So yeah, Matrix apparently knows something about aging tobacco. It's a big, big, big deal. If you don't do it right, you can actually burn the tobacco under its own chemistry. It's fermenting. It'll explode on fire. Like, it's a big deal. You don't just put it in a warehouse and walk away. They measure the temperature. They have to rotate. Whatever. We're not here to talk about that. But going with the CPI, if everybody thinks it's good, it's good. But eventually, reality will kick in if the market is quote unquote wrong. Okay. If the market is wrong, it's not wrong today. If they're selling dollar today, that's the reality of today. But off the long run, they're misreading CPI, misinterpreting CPI. You cannot stop the fundamentals. What would happen is, if the market is misreading CPI, the Fed will have to continue raising interest rates further, right? Further, for the terminal rate will have to continue to shift. Recession becomes more and more likely. And what a recession means is it's not just 2 quarters of slow growth. Yeah. No, it's you, your neighbor, and your uncle all losing their job in the same time. And then you cancel your deck project. You decide not to put the new roof on. And all of a sudden it trickles down, and it gets really bad really fast, where nobody's eating at Outback Steakhouse. Okay? And so the bartenders, the waitresses, the cooks, the dishwasher, the maitre d's, they're all losing their jobs. And all of a sudden, trickle down economics can happen very, very quickly. And you won't think about, think about it this way. What are you going to do in February if the stock market is crashing? Are you going to say, well, what about that November CPI print? Who cares? You see? So it'll come and go. Reality will lead the way on the long run. In the short run, price action, bro. Price action. That's all. Man, I got a lot going on today. Holy smokes. Holy smokes, I got a lot going on today. Anyways. What kind of trader would rush into the news? Well, first of all, that's what a trader does. Now, if you're more like an investor, an investor, a hedge fund trader, already knows they want to buy or sell something. And the volatility puts you into a trade. Oh, thank you, Maida. I did the double Windsor today with the spread collar. Huh? Thank you. Thank you. All right. So an investor says, hey, I want to buy oil. Why? And they can do a diatribe of why they want to buy oil. They could do a 1-hour lecture giving 3, 4, 5, 6, 7 different bullet points of why. So if oil drops, they buy it. If oil rallies, they buy a dip. So think of it that way. Okay, Leon? If you wanted to sell Aussie dollar, this is your opportunity. If you wanted to buy Aussie dollar, your opportunity was last night. And what about all the other stuff? That's retail. Okay. Matrix says inexperienced scalpers making quick money. They're definitely there. And it's funny, like if I had to have a rational conversation with a scalper, I would say, and by the way, this goes all the way back 20 years ago when I was doing all this stuff, because I know how to scalp. I do. Like I said, I spent a whole year on the 1 minute chart. Like it's not something that I don't have experience with. But I have compared and contrasted the strategy with other strategies that I also do. And I would sit down with this new trader and I say, okay, great. Scalping is fantastic. It's a great way to make income. It's not the only thing you should do, but you should know how to scalp. But trading the news like we just had right now is not a scalp. And that's one big, I think, misconception of newer traders that trade short-term time frames. Okay, a news event is a high volatility event-driven strategy, and it requires slightly different tactics. And it comes with many additional risks. So if I was going to be a scalper, I would say there's a proper way of doing it, and you would do it without trading the news. Because trading the news is not a scalp. I do know hedge fund traders who do trade the news. They do have a strategy, but it's not a scalp. It's a vol trade. And it revolves straddling. Okay? But they also have prime accounts. Okay? They have prime accounts. They're not using a retail broker. And they have the ability to be in and out of the market in significantly less than 1 second. So there's no slippage. There's no spread, right? All that kind of stuff. And they're in and out faster than you can blink. And they make money. But that's not a scalp. You have to understand, that's not a scalp. So very often I'll see some scalpers are making money in one short-term strategy and then lose money in a different type of short-term strategy that they think is the same as the first. But so sometimes it's working, sometimes it's not. And then in the middle there's just, for all newer traders, just really bad trades. Okay. Burn says you only scalp when price ranges. Well, no. But to me, seasonality is the biggest issue with scalping. See, to me, I scalp in every trade I take. Every trade to me is a scalp. After that, it's risk management or trade management. So if I enter a scalp or a swing trade, it's the exact same thing. So what's the difference? Well, one of them I'll take 50 pips and the other one, let's do it differently. One of them I'll take 25 pips and the other one I'll take 250 pips. But the entry is the same. And ideally, I don't want volatility because what happens during a time of volatility? The spread gets bigger. Slippage becomes a real risk. And volatility means it could be in your favor and then 10 minutes later, your trade is out or negative. A high volatility means you can be up 25 pips, go get a cup of coffee, come back and you're down 25 pips. And why is that? Well, remember, you pulled the trigger with high volatility, so your spread probably widened. So your Aussie dollar entry probably cost you 10 pips and not 2 pips. That's not your broker playing games. That's the market. That's the liquidity providers telling you you're the only idiot on the planet trading in market conditions like that. When your spread goes up, it tells you you're an idiot. Now, look, you're not an idiot. I know that. I'm exaggerating for effect, but maybe you'll listen to me. When the spread is widening, it's not your broker. It's the market. Liquidity providers have to search and search and search for another lonely person making a bad mistake. You're buying at a dumb time. Well, now they got to go find some idiot that wants to take the other side of the trade, but all the smart money is on the sidelines. They traded hours or days before you. You see? So a widening spread is normal during a high volatility event. Okay? And that tells you it's a warning sign. So if you trade right after an important CPI number because of the importance, you're going to get a wider spread. You're going to have slippage. You're going to have volatility. And for all of that, you want to take 25 pips profit or less. And I would say that's a strategy that stinks, in my opinion. You couldn't have a worse strategy than that. You take the highest risk for the smallest reward. But I do like scalping. My point there is that is not a scalp. Okay? And Burns says you only scalp in ranges. And I'm like, no, well, sort of, but not really. I wouldn't say that. I wouldn't say that, again, because if we're in a range, I try not to do that, right? If I'm trending, I want to scalp into the trend and get as many trades open as possible. Who up? Okay, so anyways, there's the lecture of the day, everybody. The lecture of the day. Okay, so if that's the wrong way, let's review the right way. So I did this in the day trading group a week and a half ago. And the discussion we had was, I'm sorry, Jim, it didn't upload properly and I didn't know. So I'll pop it back up there. Okay, let's talk about this. In the day trading group, we had a conversation about 10 days ago about front running this crazy week that we just went through. The start of it was the FOMC interest rate decision, right? Then we had non-farm payrolls. Then we had the election. And then we have CPI. And I said, well, if you're going to front run it, and I believe Darko asked the question. So I said, Darko, if you're going to front run it, get in it early so you don't face the risk. You want to kind of be in before the risk appears. And if you try to get into the trade and get knocked out at break even before it even hits or in the middle of the risk, well, you had an opportunity, and you didn't have to pay a penalty for it, right? So anyways, so after that meeting was over, I took a trade as an example. Okay. And the idea was, going this way. Okay. Avoiding all the risk. There's lots of risk in there, huh? Notice that my trade is at break even. I can't lose money. It's pretty much a scalp because I enter all my trades on a 5-minute chart or a 1-minute chart. I've been in it now for 10 days, maybe 11 days. I avoided all the risk I am just mentioned with scalping a news event. And where am I on it? 250 pips. Okay. It's a scalp. I have 250 pips on a scalp. Yeah, but all my trades are a scalp. I don't enter trades because of a 5-8 cross on a 4-hour chart. My job is to anticipate the 5-8 cross on a 4-hour chart and take the shot on a 5-minute chart. But because I have a fundamental analysis as part of my trade planning and long-term technical analysis that analyzes the strength of and the direction of the current trend, I know to hang on to my scalp for 250 pips or more. And that's where I disagree with a lot of scalpers. Picking up 25 pips is pathetic. It tells me you don't know what you're doing. Now you're like, but Wayne, I make a lot of money and I have a lot of success. Okay, you're really good at technicals, but you don't know why the trend is existing, and you don't know where it's going. You don't know when it's going to stop. So you're just shooting at rabbits all day. But you don't think like the rabbit. You got to be the rabbit. No. But look, again, I'm not poo-pooing on it. I think if you spent 5 years and you became an amazing scalper, I could work with you over 3 months and make you 10 times more successful. But I don't know if I promised that, people wouldn't believe it, right? I don't know. So, I'm working on a presentation to describe the importance of our super secret, fundamentally based alert service, because you might just think, oh, yeah, cool, it's good information for trading. Oh, it's a good signal. No, it's, right? It's way more important than that. So I'm trying to describe it, and I think I'm dumbing it down by saying you can use all the same charts you have right here, the charts you use all day, every day, with the strategies that you use moving averages, great. You use Elliott wave, great. You use oscillators, fine. CCI, right? MACD, RSI, stochastics, whatever, good. You like certain time frames, fine. All of that, like none of this chart has to change. But I'm certain you can get 3 times the returns if you only knew what the market was doing and why. So I'm putting that presentation together. I'm like 30 slides into it. It's huge. So if you were a scalper and you become excellent at using technical analysis, oh my God, you've perfected the entry. You understand? Scalping's all about the entry. But if you ever knew that your 20 pip trade was worth 200, wouldn't you want the 200? You're like, but Wayne, well, if I'm a scalper, I could probably take 10 trades along that way. Well, okay, that adds up to 200. But what if you were that good and you took 10 trades along the way, but you didn't cash out of any of them? One was 200, one was 180, 100, and the other one was, 150, and the other one was 120. And oh my God, girl on fire. Okay, but anyways. Okay. Is Dixie topping? I wouldn't go that far, but it's falling today for sure. Yeah. Okay, good. But that makes sense. If the market believes the news is good, then that makes sense. Okay. So anyways, that was me scalping USD Mexican peso. One is what I'm trying to show you. That's one conclusion of what I just showed you. The second one is how to avoid risk in the market through solid analysis. Okay? Solid analysis. Did you see, like, again, I just want to make a point clear because it's important. Okay? That's analysis. That's a solid trade plan discussed in a group setting in great detail. And the point of the analysis wasn't how right I'm going to be on USD Mexican peso. It's more like, how do you make a determination of what your strategy is? And when do you take the trade around the event risk of these huge events, this huge event? Will the event itself be an opportunity to make money? Yes. Trading FOMC, trading NFP, trading the election, trading CPI, each one of those is highly, highly risky. But through solid analysis of the fundamentals and the trends in the economic data, how do you take advantage of those opportunities with the least amount of risk? And that's what I put together. That's how you do it. And along the way, I could have gotten knocked out of break even multiple times, but that's risk-free. Rajnil, you're probably right. And I think that what happens is some guy reads a bunch of books and becomes a Forex guru. Okay? Okay? Sean, I guess it depends on what you mean by industry. But if you're talking about YouTubers, yeah. Yeah, I would imagine that's true. Okay? I imagine that's true. What do you think the future of Bitcoin is? I don't know. Okay. Where were you when I said 10,000 2 months ago? Anyway, so look, I'm trying to teach you guys to do your analysis, think ahead, and be thoughtful of risk. And that was a strategy I shared with the community, because you got to get in the game, but you have to lower your volatility. Okay. Yesterday, we had a great discussion about global yields based on really market psychology and not basic math. Okay. Anyways, go back. So anyways, so yeah, Sean's like social media stuff. About 20 years ago, when my monthly trading volume approached $1 billion, GFT was required by the National Futures Association to open up a dealing desk just to serve my trades. The NFA got involved. They sent people from Chicago to, I think, Detroit, where GFT was, and that we had to do rules and regulations and procedures. If something went wrong, who's going to make the call to wake me up in the middle of the night? All this kind of stuff. Like, That was a big deal. The regulatory compliance was crazy. And I'm sure there's very few YouTubers that had that problem, especially 20 years ago. Yeah. Oh, yeah, Sean. Yeah, I know the name. Real deal. Thank you. Okay. Huh? Not only am I beautiful and a genius, the best thing about me is my modesty. All right. Enough of the jokes. Let's move on.com. Oh, you know what I want to show you about Bitcoin? Yeah, funny looking. Funny how, like a clown? Better watch it, Sean. Funny how? He's a big boy. He can answer the question. What exact? I'm here to amuse you? Okay. Oh no, my oil trade. No. Hey, where did the stop go? Oh, yeah. All right. Anyways, we'll hang on to that. Oh yeah, I want to do this one. Check it out. Check it out, my friends. Look at that. Hey, why did Bitcoin go up last night? Can you imagine there are people in this world that don't know that number? Huh? Can you imagine there are people scratching their heads going, oh my God, why did it bounce there? And they're going to say, oh, well, you know, somebody was protected. Some big hedge fund was protecting 15,000. Oh, well, there's a hedge. Or and there's going to be 9,000 reasons why Bitcoin stopped falling at that price. Okay. Let me just put a clean chart on here. Remove all my old analysis. Okay. Maybe we can go weekly. Okay, let's look at this. All right. Is Bitcoin tradable? 1, double top. 2, central pivot. 3, M1. M1 and done. Next possible goal. And by the way, if I were to read this chart, I have no opinion. The bottom is $206.40. By the way, I talked about this last night in the day trading group. Yes, shameless plug. Why don't you just join? By the way, the swing trading group meets twice a week now. And the Tuesday meeting is getting rave reviews for, again, it's not us telling you what to do. You will become a better trader if you join the swing trading group. And there's no doubt in my mind about it. Partially because the coaches are, well, I don't know about me, but Ryan's a good coach. I do my best. But the people in the group, the traders in the group are amazing. So why don't you just join? Yeah, so anyways, Glassnode, right, as Byrne says, Bitcoin went up because long-term investors are getting interested around. Like, dude, what kind of bullcrap is that? They're getting interested. How could you possibly run a book on, oh, we think people are going to get interested around 15,500? What, around? They're going to get interested because what? Well, 15,000 is a psychological level. What? What a giant guess. You see, right? What a giant guess. They're getting interested around 15,500. What nonsense. So how about this? We knew this in January, and then going back to more like February, this top. This is out of the training course. This is in my book from almost 20 years ago. It's all known. That top predicts $6,206.40. Okay? Along the way, the conservative target is 16,000, my bad. $16,129.30. Do you hear me saying, oh, we think people will get interested around 15,000? No, $16,129.30 is the price. Which one would you want in your team? Okay. Okay. Yeah, good job, Bernd. Yeah. Sweet. Good call. So anyways, there's a bounce there now. That's fine. And it could fart around for weeks, even months, and it wouldn't make a difference. Okay? Now, will this fall forever? Well, I never said that. Okay? But when you get a drop like this, you start to find the dumb money. The saying goes like this. When the tide goes out, you see who's been swimming naked. So when the pound crashed because of huge political mistakes, it was very clear very, very quickly that pension funds in the UK were about to get margin called because they couldn't scramble to get the collateral fast enough, because after the worst day in history for the pound, the next day was even worse. And they were still trying to cover the collateral requirements from the day before. They had to get rescued from the central bank. So when the pound collapsed, we found out the pension funds were naked and vulnerable. So now what's going on? Bitcoin starts falling hard and fast, and all of a sudden, exchanges are going to go out of business. And then if they go out of business, what about the counterparties? What collateral do they have or need? And how does that affect like stable coins? And all of a sudden, there's a domino effect because the tide goes out, and all of a sudden you find out there's a lot of people standing around naked. You couldn't tell during high tide, but when the water is ankle deep, you get a good look. Who's in trouble? Okay. Now, Sean says, hey, for me, 16,000 is the price and blah, 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 blah. Yeah, look, guys, look. This is the projected conservative bottom on January 1st. Okay. January 1st. If you were a bear, Okay, and the market had already started collapsing. That's what we knew in January. I don't remember, but it's entirely possible I could have pointed that number out. Why? It's not an opinion. But, okay, if you have a real use case and you're a real investor, you want to be in this for years, decades maybe, I don't know, then that is a price that you have to pay attention to for some sort of probable, you have to measure all of this for some sort of probability of becoming bullish. Now, because of money, everything that's happening is about money. Okay? So if I were to guess on all of this, because of money, not because of Bitcoin, because of money. How do I define money? The money is the economy. Money is consumer and commercial demand. Money is economic activity, which leads to things like oil is money, gold is money, US dollars money. Okay? Okay, and Bitcoin, well, I don't know if I'd call it money, but anyways, because of the effects of everything, all money in all its forms, all asset classes are interlinked, in my opinion. I have a Newtonian physics point of view to economics, that this is one giant machine. Okay? And if I look at the machine and anticipate future productivity of this machine, I would not be shocked if Bitcoin was at 6,000 and potentially lower next year. We are not in a scenario of blood in the street. We're not even bleeding. Okay? We're not even bleeding yet. Okay? So if things get horrible next year, where the United States does get into a situation where the Fed raises interest rates so high that people actually start losing their jobs, people start losing their houses. Look, the Fed needs to destroy $5 trillion worth of value. Now, part of it is going to be through quantitative tightening, and the rest is going to be through destruction of assets. So what I've been saying for a long time is they jack up interest rates to 5.25%. Okay? And then they sit tight for years and years and years and years and years. Years at 5.25%. Meanwhile, 5 to 10 years of quantitative tightening, which means it's going to cost you more and more and more money to borrow. So, yes, the Fed funds rate will be at 5.25%, but a corporation borrowing money will probably have to pay 8%. And none of that's priced in. So if any of that point of view has any sort of reality to it, because again, it's hypothetical, then Bitcoin's going to fall even lower than 6,000. But that's the current line in the sand. Okay? And you're like, that's impossible. No, it's not impossible. Huh? Remember when tulips were you could trade a tulip, one flower, for a house? Or one tulip for a windmill? Hey, houses provide a service. You live in them. They provide a shelter. They also usually have asset appreciation tied to them. Okay? A windmill has an income stream, a cash flow. Those are real assets. Your tulip is a flower. They're pretty. And if you're occupied by German military, you can eat them. But other than that, not a lot of intrinsic value. I'm not making a comment on Bitcoin. I'm telling you, if the stock market drops another 50%, another 50%. What happens to Bitcoin? Bitcoin goes down with it. Yeah, I'm not talking about Bitcoin. I'm talking about Newtonian physics. See, I'm a macroeconomist. I look at the aggregate. I like you, but I don't like people. Do you understand that? I like you. You're cool. We should have a cocktail and a cigar, and we can talk about money and finance and economics. Great. We can talk about jazz. We can talk about world travel. Great. I like you. I like hanging out with you, but I don't like people. Okay? I'm an aggregate. I'm not talking about Bitcoin. I'm talking about global contraction of economic activity. What would happen in that case? Okay? How about this? Let me put it in an example. You lose your job, so you hang on for 3, 4, 5, 6 months. You should have at least 6 months in cash, right? So that you can pay your mortgage and buy food and pay for medicine and all that for 6 months. So you have 6 months in cash, right? So you lose your job in January. In June, you're running out of cash. How are you going to pay your mortgage? Well, maybe I'll sell my Bitcoin. Uh-huh. You see? Now, hedge funds go through that problem too. There's a lot of things going on. So if Bitcoin collapses and some guy loses a bunch of money in his hedge fund, he has to dump some profitable trades too. So he takes a massive hit on a Bitcoin trade and has to cover his losses by selling his Google stock or Apple stock. Uh-huh. And now the winners are losers because the losers are losers. Okay, in the 1960s, the first foreign exchange hedge fund was created called FX Concepts by a man named John Taylor. And he was very, very, very successful, making many, 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 many billions of dollars every year for decades and decades. Huge clients. Huge. He was making billions of dollars a year. Why did he go out of business? Well, let me put it this way. He went out of business in 2008 or 2009. Why? Because he was naked and exposed and he had a bunch of bad bets? No. He ran a tight firm. He virtually had no risk. Why? He was hedging. He outperformed the market. He made money that year. Why did he go out of business? Real estate was down. S&P 500 was down. NASDAQ was down. Dow was down. Dollar down. Gold down. Everything down. So what's the response of money managers around the world that have money invested? Get out of everything. and he was hit with redemptions. He's like, dude, we're not down. We're getting out of everything, anything. We're just getting out of anything. We're just buying bonds as fast as we can, and we're running to the hill. We're out, man. We're out. Just give us our money. Please give us our money. Please give us our money. Because a lot of the investments people had made were illiquid. There were hedge funds that said, look, we can't get out. We're in real estate. We can't liquidate. Everything's crashing. There's no buyers. We're stuck. Even if we wanted to dump everything at 50% loss, there's no buyer. And if there were buyers, there's no financing because the banks are going out of business. The mortgages are going out of business. Like everything is gone. John Taylor's like, I'm fine. I'm in cash. Well, you know what? Too bad for John Taylor. He went out of business after 30 or 40 years. And it wasn't even his fault. He was the one guy during the crisis that was still making money. Why? He's a global macro foreign exchange trader like you and like me. Right now, every asset class is either break even if they're good. Most are losing money. Like negative 20% is common right now among asset classes. And there's dozens of asset classes. Most are down 10 to 20%. The best are near break even, and there's one asset class making money right now, up nearly 10% for the year. Global macro. Huh? Global macro. That's you. That's you. And then there's my wife. She picked about 5 or 6 stocks this year to buy. And her trades are up like 20 to 30% each. Jesus Christ. I'm like, don't look at mine. I'm like, oh, baby. I want to get with you and take you a picture. Oh, my God. I'm not joking. She's like, well, this one's up 33 and this one's up 22 and this one's up 28. I'm like, holy schnicker. Girl on fire for sure. My God. Okay. What do you mean by global macro? Okay. The connection that I just said, where dollar's weak, so you buy gold. That kind of stuff. There's economic trends, okay, that impact the flow of money around the world. And because of the flow, the direction, literally think of cash flow. Okay? Think of cash flow. It flows like money, or it flows like water. Okay? And in like venture capital, one of the things you have to analyze is the waterfall. Like literally, how does money flow throughout the structure? They're all interlinked. They're all corks in the river of Forex. Forex is money. And what we do as macroeconomists is follow the flow of money around the world and its impact on the various asset classes. Now, Marvella says, I thought all asset classes are down. Not global macro. Okay, the last time I looked was maybe a month and a half ago. According to Barclays Hedge, okay, who analyzes CTAs in the United States, if you look at the dozens and dozens and dozens, global macro is up almost 10%, probably more than 10% now. They're having a great year. It's a good year. But relatively speaking, an insanely good year. But this is one of the benefits of being a foreign exchange trader. That we offer consistent returns. And when you invest into the stock market, what do you get with the stock market? Okay, up 10%, up 10%, up 10%, up 10%, up 10%, down 50%. That's volatile, isn't it? Up 10%, up 10%, up 10%, up 10%, up 10%, down 50%. And very often it's even more than that. When you throw in quantitative easing, up 20, up 20, up 20, up 20, up 20, down 50%. And the 50% is magnified because there were so many ups. The higher it goes, right? The farther it falls. And then most people trading don't understand the macroeconomics of what they're doing, so they never know when it's going to drop by 50%. Now, to a macro trader like you and I, we don't really care. Liquidity is not a problem. It is in real estate. It is in stocks. Many stock strategies are not scalable. And if you're short, once again, not scalable, and then you can get caught in a squeeze and now you're illiquid. Real estate, you can't just dump real estate. It makes money every year, every year, every year. Easy money until it's not. And all of a sudden you can't get out. You got to refi. The value of properties tanked. The amount of renters you have dropped because they lost their jobs. So now your income is down. The assets down. You owe a boatload of money. You got to refi. You don't have the cash. Now you're bankrupt. And oh my God, what the hell just happened? You didn't understand the macroeconomic situation of your investment. Now for us, we can buy and sell gold. We can buy and sell the stock market. We can buy and sell currencies. We can buy and sell cryptos. And they're all related to the one thing, the economy. Okay? And you don't need, like what Min is saying, just this idea, the lexicon of Bitcoin's going up because a whale is buying it. What nonsense. Just, even if it's true, just like, I can't imagine trying to be a trader and paying attention to stuff like that. You're a rumor mill. You have a career based on a rumor mill? No, I have a career based on facts and hardcore analysis. And that's quite different. So, is there a whale buying Bitcoin at $16,129.30? Well, I could have told you that in January, but I probably already did in January. You're like, wait, January? Yeah, January, February, March, April, May, June, July, August, September, October, November. 11 months ago, we already knew that number. So is there a giant whale moving the market? No, somebody had a buy order. Because you're supposed to know this stuff. And if you don't, that's the problem. You don't know, and somebody else does. So when do you want to get on the clue train and start knowing stuff? Okay? Double top. You don't have to be a rocket surgeon. Okay? This, by the way, is a buy zone for Bitcoin. Once again, if you don't know that, you don't know how to trade. I'm sorry. Don't get mad at me. Get mad at your stepdad. Take that anger out. But don't be mad at me. I'm a lover. I'm a preacher. I'm sharing. For free, mind you. Okay? So take it as a wake-up call. That's an obvious buy. It's the best buying price of the entire year. If you don't know that, you don't know how to trade. I'm sorry. What's the next one? This is the sell zone. What's the target? The actual target is here. 6,206. But if you want to be conservative, the first exit is here. 1,600. $16,129.30. Those are facts. I don't have an opinion. You either know how to trade or you don't know how to trade. You either know how to read a chart or you don't. You're either pregnant or you're not. You're either patient or you're not. You're either disciplined or you're not. Okay? So is there a big whale in London buying at $16,129? Somebody had a buy order there. Could have been 6, 7, 8 months ago. You see? So it's your fault if you don't know. You have to take responsibility. So if I'm sharing this, you're like, oh my God, I need to know this. Pay the $88. It's not even the cost of a textbook, for crying out loud. Okay? That's that. Do it or do not. There is no try. Anyways, there's Natty. Natty Batty, Natty, Natty, Natty. Okay. All right, we can talk about this one. Okay. This is a play off of the volatility. Okay. I got that. I got that. It's only a volatility trade. But I'm trading in the direction of my fundamental bias. Sean says, what a hell of a zone to trade. Shows you how much it moved last year, Sean. It's a reflection of volatility. Okay, well, let's go back. That's another great point. We'll talk about that. Let's go back and talk about that. The math of it. You're like, it's hard to believe. You know what? This was hard to believe. So according to that, by the way, look at the top of the market. We double topped on R3. Ha, 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 ha. Anyways, based on all of that, high-low close divided by 3. Okay. And then it starts looking at, basically, you can consider it standard deviation. Okay, the highest high, the lowest low. Okay. Gives you range. And then there's measurements that you can take, which are really just, to me, I kind of consider them, like I said, deviation. So, okay, you start with, you measure the top and the bottom of the range. Well, that gives you range. And then where it closed gives you a weight. It's not a mean, it's a weighted mean. It tries to incorporate sentiment. So you get this number here, which ended up being the epic sell of the year. But the thing is, that is higher than this. That's central pivot. Okay? But to get things like this range, it's impacted by this range. Because it's a form of sort of deviation, if you will. How far from the mean does price tend to get? So anyway, so you get here, and then imagine it this way. I'm going to dumb it down. You might not understand the math, but it won't even let me. I can't grab that out. But let's do it this way. Imagine we first calculate the mean, and then we calculate the standard deviation from the mean. Okay? And therefore, you basically get a range, a channel. Based on what happened last year, this distance and this distance will act like support and resistance. And you can see how close it is to doing things like, you know, this is the zone in which we have support, and this is the zone in which we have resistance. Now, it's using math to do it, but what the math is attempting to do is look left. So, where was the support? Where's the resistance? Let's mark that. Then what you want to do is to get 95% of the projected move based on what happened in the previous period that you're measuring, you also want to measure 2 standard deviations. Now, 2 standard deviations is too far above, and for some reason, because this is so much data, it won't let me pull the chart down. But just imagine there's 2 standard deviations up there. R2, S2. So now we have 1 standard deviation and 2 standard deviations, but it doesn't tell you direction because they're going to negate each other. It's more like if we have the type of volatility that we had to the bearish side, where's the lowest low? 2 standard deviations. If we continue the volume and volatility of the previous period and it's bullish, where's the highest high? 2 standard deviations. Why? Because it's trendy. It wouldn't trend 1 deviation. That wouldn't be a trend. That would be a range. So it would trend to the next highest high. It would be 2 standard deviations above. Or if it was bearish, 2 standard deviation below. You following? I'm trying to explain very complicated math. Okay, now the next part is you got all that calculated. Now what? Well, then let's calculate the midpoint. Okay, you take the distance between 1 standard deviation and 2 standard deviation, divide that by 2, so the distance divided in half is M1. Taking the distance from the mean to the first standard deviation, divide that range, so you add, right? Anyway, so you find the range, and then you divide it by 2. You get this pivot. Take the distance from the mean to the 1 standard deviation above. There's the midpoint, so on and so forth. There's going to be one up here. It's actually higher, but we can't see it. But nonetheless, you're doing the calculations. So why is this a $10,000 difference? Well, that's how crazy last year was. Okay? So Burns says, I don't see 6,000 unless we get a big ass recession. That's it. So now you're thinking like a macroeconomist. Now you're not asking yourself about Bitcoin. You're asking yourself, are we going to go into recession? So what are the different things that would put us in recession? What things can we measure to determine the likelihood of recession? And now you're asking the right question as a macroeconomist. So Sean says, well, what if this year is more or less crazy than last year? That's what this is determining. We just hit the conservative target for bears. That could be it. That could be the bottom, everybody. Oh, but there's a big whale buying it. What garbage, garbage. Oh my God. Okay. You'll never have a career listening to nonsense like that. So in this case, you could argue, you could say, Wayne, strategically speaking, could $16,129.30 be the bottom of the year? Yes. Okay, now what? If you're a bull, tactically, what would you do? Drop into smaller time frames, eventually all the way down to the 5-minute chart and scalp your way up. And as technical conditions change, it'll become less and less bearish, more and more bullish. So you'll be scalping for a while. But if you're truly an investor, you might buy it here, put a stop nearby. And if $16,129.30 holds, you never let go of Bitcoin again. But you have to understand, this is not my opinion. That's what the chart says. But what's your opinion on the future of Bitcoin? And you line that fundamental opinion, which we call bias, with the technical opportunities and threats presented to you through the analysis of charts. So you say here, okay, here's my line in the sand. Okay. And what are you going to do about it now? Are you going to buy dips or not? Well, let's look at this. That's an opportunity. And we'll do this. This is an opportunity. Great. We can go insert indicators, custom, biased pivots. I want to be a bull. I want 20 daily setups for scalping. Okay. Okay. By the way, this green area is the scalp zone. And so between today and tomorrow, if you're a bull and you want to buy off this bottom, this is the trade plan for the next 24 hours. This is on its way back to $19,500 and $19,511. Current target for the day. So that's dynamic. It's changing in real time, as you can see. So the trade plan for today, if you're a bull, up, down, up, down, up. Conservative target, $18,781.29. The aggressive target for today, $19,809.47.5. So once again, when somebody says, oh, people are interested around 15,500. Nonsense. What nonsense? How could you possibly have a career based on that type of analysis? Rumors and hearsay. Oh, well, I saw it on Twitter. Huh? What? I saw it on Twitter. He's a really good guy. I like him. I follow him. What? That's what? That's the analysis you do? Okay. Okay. Wow. I wouldn't call that analysis. Okay? I put more thought process into tying a double Windsor tie. Huh? Who does a double Windsor tie? Look at that. Huh? Beautiful. Huh? Nice. Nice. Okay? I could say I took advice from a guru on YouTube on how to tie a Windsor tie, double Windsor knot. That would be a good use of YouTube, but I didn't. But I could have, I suppose. But taking investment advice from some guy on YouTube? Ho, 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 ho. Okay? But I hope you appreciate what I'm sharing. The question is, what steps are you going to take to investigate whether what I say is true or not? I am not going to get you rich quick. I'm not going to put you into private jets unless you are already a millionaire. I'm just trying to share the truth. I'm trying to get you away from blah, blah, blah. Okay? Blah, blah, blah. Yeah, Bern says, yeah, I'm on YouTube. Don't listen to me. I'm trying to wake you up. And I'm trying to get you to see reality. Don't listen, learn. I will not get you rich today, but you will probably discover the truth. Again, what's on my ring, by the way? Look. Yes, that's gold, baby. That's gold. What does that say? It's not going to, there we go. It's not going to focus, huh? Too close, too small. Okay. It says Veritas. Look at this. Now we got to get it in focus. Veritas. It's the truth through knowledge. I'm not the world's greatest trader. Nope. I'm not the world's greatest trader. I'm not trying to come across that I am. But I will teach you what to study and how to think so that you can become the world's greatest trader. I hope you do. But you got to know what you don't know. I wish somebody told me 20 years ago all the things I don't know, because I'm a hustler, baby. I will figure it out. Just tell me what I need to know, right? And I'm a girl on fire. I will figure it out. I just need to know. Okay? So I hope I shed some light. Illuminati. I literally, when I graduated, they gave me a lamp because now I'm among the Illuminati. I know things. And knowing things gives you the truth. You can see reality for what it is. So when I'm teaching you macroeconomics, when I'm showing you technical analysis, this is information you use in your careful study and analysis to uncover the truth. And from that, you make decisions. Not because some whale in London is buying Bitcoin, or some dude on Twitter said, oh, people are getting interested around 15,500. You need a number, dude. And you need to know why. And why are people buying it there? What's the importance of M1? What's going on to cause it? What about the future? Do you have a base case, best case, worst case? Have you thought about what next year could be like, what it might be like? Do you understand what to study to know that you're wrong so you can very quickly change direction? Okay? So yeah, don't listen to me, but I might wake you up. And then you are forced with a much bigger decision than whether you buy Bitcoin down here or not. The bigger decision is, now that I've shown you, what do you do next? Now that I've shown you the truth, what do you do next? Blue pill, red pill. Remember, I'm only promising you the truth. Hey, I'm out.